as we've been going through this, I've been saying over and over and over, this does not look like a completed structure. It does not look like a completed structure to me. Rather, I really believe that we are still in the midst of a very complex corrective structure. What supports that view is that this rally, I can't even get a reasonable leading diagonal out of it. I mean, I can fashion one, but I can't get a reasonable, even leading diagonal out of it. So that should tell you, I think the probabilities are strongly in favor of a lower low in the metals before we can even determine if the next bull phase has begun. Remember, once we complete this decline, and I still believe we have a lower low to strike. We're not going to know if the next rally is going to be taking us to much higher levels, that this is all the correction we're going to see, or if this is just the A wave in a much longer correction, which is what we experienced in 2011 after the last major blow off top in the metals complex. Now, that one took 4 years. I don't think this one will take as long, but you can never know. I would be shocked. I can't say shocked. I think it is likely that this one could take anywhere from a year to maybe as much as 2 years. But I would be surprised if it took us as long as that. I think it could take us several years to complete, though, because this B wave could take half a year in and of itself. But again, I'm not going to know whether or not we're going to higher highs directly or if we're going to be mired in a longer correction. Therefore, this next low, if we complete this structure, and again, this is the higher probability because of two reasons again. One, we don't have a clearly completed corrective structure. And two, we don't have a clearly impulsive rally off the low. Those two factors make me believe we're going to get lower lows. Now, once we get those lower lows and we rally off those lower lows, then we'll be able to make some determinations as to whether or not we're done or not with this correction. If we're not done, you can always sell whatever positions you buy here and rebuy after the C wave down. So I don't see a lot of risk in buying this next lower low. Okay, but my expectation is one way or another, I do think we probably, and I think it's likely, we see those lower lows. I'm going to show you the exact same scenario in silver. Exactly the same pattern. We could get, I don't have this. This does not look like a completed ABC structure to me. Rather, it looks like a much more complex corrective structure. And yes, we still could get the evil scenario, or we're just going to grind down into the fifth wave lower low. Silver has the most clear of the paths for the lower low as a more direct perspective. And then I'll show you on GDX, same scenario with silver as we do with gold, in the exact same approach. You buy that lower low. GDX is presenting us with a 5-wave decline. That 5-wave decline really is indicative of, I mean, in truth, in GDX on the daily, this actually looks like the 5th wave down on the daily. But I'm going to show you something on the micro, and we'll put that a little bit to question. So the point is that the point I'd like to make across all these three charts, there is no high probability, low risk short trade to be had yet, because we're not even seeing it as a highest probability that we're definitely going down to those lower lows more directly. So that purple count is still sitting out there, believe it or not. Not as much so in GDX though. GDX really does look like we're in the purple count and we're developing a C wave down. The problem with GDX on the micro is this. Yeah, I think on the daily, this does look better that this is wave 3, this is wave 4, and this is actually the 5th wave to the lower low. But one way or another, I think it is reasonable to assume that we're going to get another bounce, whether this is wave 1 or this is an expanded V wave. And I'm starting to move more towards this is just a deeper wave 1, where this is actually the 5th wave of wave 1. So I'm really starting to move into that perspective, especially if we get a corrective bounce rather than an impulsive one. What will change my mind is if we see a sustained break of 86.84, and then we follow through below 85. Below 85, I have to assume we're on our way to 70. That does not mean you automatically short it. I don't necessarily have a great risk reward entry for a short just yet. So I'm going to be patient and just focus more so on where we want to enter on the long side, which I think is the better opportunity. GDX may still give us a shorting opportunity. So, but I don't have a low risk, high probability shorting opportunity right now. I don't have it yet. I'm still trying to track for one. And one of these two scenarios could give it to us as long as we do not break that 86 region here and follow through below 85.